How agency owners legally pay zero tax on $10,000 or more. What if you could pull 10, 15, 20 or more out of your agency every year completely tax-free? Well, you can, but many agency owners try this and they mess it up. Hi, I'm Cody. I'm a CPA and a tax strategist. We work with marketing and PR agency owners doing between 1 and 10 million in agency gross income, helping them increase profit, improve cash flow, and reduce taxes legally. Today, I'm going to show you exactly how the Augusta Rule works, and more importantly, the mistakes that can turn this into an audit risk. So what is the Augusta Rule? Let's set the foundation. The Augusta Rule allows you to rent your personal residence to your business, or to anyone else for that matter, for up to 14 days per year. And that rental income can be totally tax-free to you personally. At the same time, your agency may deduct that rent as a business expense. So here's a simple example. Your agency pays you $1,500 per day, and you use your home for 10 days for business. That's a $15,000 deduction to the business, and that's $15,000 potentially tax-free to you. That's real cash flow, not accounting. So why does this matter to agency owners? Most agency owners are focusing on revenue, but the real problem is low profit, poor cash flow, high tax. There are agency owners out there making $3 million in agency gross income and they still feel broke. Strategies like this help you pull money out of your business efficiently, which is the whole game, keeping more of what you make. So let's talk about when this actually works. This is not theoretical. This works when tied to real agency activity like quarterly planning meetings, leadership offsites, financial reviews, pricing strategy sessions, client advisory meetings. If you're already doing these, you're just structuring them smarter. Let's talk about minefield, what I call number one, the fake business purpose. You can't call a family dinner a strategy meeting. It has to be clear, structured, and business focused. If it doesn't hold up on the scrutiny, it doesn't count. Minefield number two is no documentation, and this is the biggest mistake I see. And no paper trail equals no deduction. You need a rental agreement. You should have a meeting agenda, notes or minutes, proof of payment, fair market rent support. Skip this and the strategy is going to fall apart. And I see this all the time. Minefield number three is overcharging. You don't get to pick a number. The IRS expects reasonable value. To get that value, use local event spaces, hotel meeting rooms, comparable rentals. If your number feels aggressive, it may be, but look, get the documentation to support it. So don't pick a number and then go get the documentation. Get the documentation and then from that, pick your number. Minefield number four, going over the 14 days. And this one hurts because guess what happens at day 15? You lose the whole benefit. It's all taxable, not just the 15th day, all 15 days. The whole thing becomes taxable, all of it. Minefield number five, mixing personal and business. You can't blend half business with half personal and call the whole thing deductible. Keep it clean, define the meeting, define the time, and define the purpose. Minefield number six, treating this like a hack. This is where people get into trouble. It's not a loophole. It's a strategy when done correctly. Stretch it and it's going to break. So a quick question here. Would you actually use your home for a leadership or strategy meeting? Or does that feel like a stretch to you? Drop a yes or no in the comments. I check them all. So here's the bottom line. The Augusta Rule can create tax-free income. Your agency can deduct the rent, but only if it's done right. Watch the minefields. No real business purpose, no documentation, inflated rent, too many days, mixing personal use with the business. Avoid those minefields, and this is a powerful tax strategy. All right, before you go, if you're an agency owner and you want to keep more of what you make, I've got two things for you. First, grab a copy of my book, The 12 Biggest Tax Mistakes That Cost Agency Owners Thousands. It breaks down the exact mistakes I see every day and how to avoid them. Second, if you want to see what this looks like for your business, get a free tax analysis. We'll take a look at what you're doing now and show you where you might be overpaying. And if this video helped you, make sure you subscribe so you don't miss future strategies on tax planning, cash flow, and building a more profitable agency. I'll see you in the next video.